Welcome to Show Your Priors. We're your co-hosts, Michael Nichols and Jason Thompson. We're a business strategy podcast. We look at the week's news stories and we rip them apart to see what strategies lie underneath. On tonight's show, SpaceX had the most valuable IPO in history. We'll dive in. Anthropic released Fable 5, but the US government pulled the plug in a matter of days. And then we'll take a look back at Apple's 2026 developer conference. But first, we'll hop into the Firehose and the headlines. CrowdStrike's threat assessment states that North Korean operatives are behind 47% of state-sponsored hacks on the tech sector for this past year. They're using fake identities, AI deepfakes, and stolen credentials to land remote work, collect salaries, and fund North Korea's weapons program. Mike, any strategy ideas on how we can combat that?
I think that one's a difficult one that's only going to get more difficult because companies are moving to remote. That was actually a cultural thing that came out of the COVID epidemic, right? So we went to work from home and the culture fully embraced that. And although you see some return to work policies, return to the office policies, mostly as stuck, and particularly among dev jobs. I know at my last job, the devs were, if they were talented, they were allowed to work from home. So I think you're just going to see as, you know, you're getting rid of maybe some of your more expensive workers at home domestically, you start hiring remote jobs, right? Remote workers. That comes with the risk now of AI being very capable of impersonating people, creating profiles for jobs that were probably written by AI, right? So you get your first pass, and for people with no scruples, they can write their resume to whatever they want it to look like for the job. And since it's being screened by AI, then they can get through the gates, right? So I think that's going to get more dangerous, not less, as we go forward. Because how do you really verify the identity in the age of AI, right? I think that's one of the big problems that's arising. And then the strategy is actually pretty smart by them, right? Yeah. You join as a worker, and this has been common, I think, for corporate espionage and espionage in general. You get access to all the data, you steal the IP, and even cleverer, right, was if you get caught, you just ransom them to say, or blackmail them, hey, I'm going to tell everybody that you're not secure and we have all this data, so you're going to have to pay me to keep it quiet.
Yeah,
so you got to hand it to them for their ingenuity. But I think what could be interesting, Jason, if you can explain to people what CrowdStrike is, for those that don't know what it is, because that's kind of a nice advertising report for them too, if I've understood what they do properly.
Well, CrowdStrike is a cybersecurity firm, I think based in the cloud mainly, and they look for threats constantly. They update databases with known threats and try to prevent any actions with them. I think that would involve, looking for vulnerabilities in their customers' software, that kind of stuff. They're a really big company. I know that they're a really big name in the security industry. Not something I deal with firsthand, but I am aware of it, and they're a very large player in that realm. What I found interesting in this is that in a lot of cases, these require domestic jobs easier, so they can actually hold down these jobs for long periods of time. Because AI helps them do their jobs more efficiently. And obviously they're developers, they can, vibe code, I guess. And keep their jobs.
Remotely, right?
Yeah, remotely. It's interesting. Interesting story.
So I would hate to admit that the boomers were right, that we need to return to the office, but for all the wrong reasons, right?
Yeah, I don't think we're putting that back in Pandora's box, right?
Yeah.
Not completely anyway. So this was interesting. A couple weeks ago, we had on Rita McGrath. She has just now released a article in Harvard Business Review, and it's discussing strategic centering. Mike, can you break that one down for us?
Well, if you remember in the episode where we interviewed her, what we were talking about is the strategy books and the management books, and a lot of the management practices that are still left over, because a lot of the management that has ascended to the heights of corporate, to the executive positions, grew up in this environment. When you're coming out of post-World War II, you're producing a lot of things. It's a hardware-based economy. You're producing consumer packaged goods, widgets. We call it the widget economy, if you want to call it that. And you had something called Taylorism, and then you had the rise of the Japanese, Kaizen, etc., where you have production facilities and you're driving efficiency out of that. And your strategic moats come from your facilities, your physical assets. And she, if you remember, was saying that entire paradigm is completely disintegrating. And it may have never been true in the first place, but it was at least partially true. Now it's becoming increasingly untrue. And as the world is getting more and more uncertain, the question is, what should the strategy of the company be? Now, I write a lot about, in my book, the fact that when the world was such, companies created their management, their strategy, policies, and they mostly ran the company from the P&L. Right? And strategy was really just a proxy word for our strategic targets, which were what? Actually just P&L targets.
Yeah.
We're going to do 10% growth. If anybody asked how, you might get a vertical name or something like that. Or, hey, radical accountability, you figure it out. Right?
Well, where does that 10% come from, Mike? Is that just something that says, oh, that seems like a good target?
No, they just pull it straight out of their asses, typically. And you know it because you'll be in industries that are going at 3%, like really saturated industries where it's growing at 3%, which doesn't mean everyone's growing at 3%. The leader might be growing at 5%, and they own 50% of the market share, and the rest are lagging. And, a company leader will come along and says, well, they're doing 6, we can do 12. In a market that's growing 3, and you don't know if it's just hubris or what it is. And then they'll point to, in the past, we grew at this rate, and they don't tell you, well, you did it through acquisitions.
Yeah.
That is not the same thing as growing organically. Okay. So her point is that that's no longer a way to run the company. The uncertainty is too high, so you can't depend on your existing machine being there forevermore. So you need to look for business model innovation, different markets to serve, different customer problems to serve. Well, how do you do that? And there's a lot of literature on this, and she points out that, well, and I hate this word, and she didn't use it, to be fair to her. You hear the corporate North Star. The companies need a North Star.
Oh, yeah.
Now, that's always been the P&L, but she's saying the North Star needs to be something about your company that gives it purpose. It's either you serve a customer segment, you have a particular technology or a platform, or you have a strategic purpose that you're going to pursue, or a business model that you're going to apply across different ones. Good example was Fujifilm. We talked about one of the episodes where they were a chemical company. That was their North Star, if you want to call it that. And they were a technology platform. They were good at making chemicals, and the question was only where to apply that capability. The hardest thing about all of this, though, is, and this is the problem I have with most strategic frameworks that come from consultants and academics, is the question is, how do you determine the one thing? Mm-hmm. And that's not an easy question to answer. And here's the other part. You'll see frameworks like a Blue Ocean and you'll see leadership writers out there. There's one out there right now from Harvard as well. And they'll make statements, all you need is imagination and the willpower. That is not true. It is not true, because when you grow up as a company, you start to accumulate path dependencies. You get an organizational DNA, you get channels, you get customers you're attached to. We'll look at Harley later. They're trapped in a brand, right? So you get all of those path dependencies. It is simply very expensive to change those. So in this way, it's a lot like an animal mutating. There are mutation costs. Athens can't just become Sparta.
Right.
It is a naval environment, right? It has a naval DNA, sits on the harbor, has an open, well, mostly open democracy. It was actually led by the oligarchy as well. Sparta can't just become a naval power. And we talked about this with Rome and Carthage. Carthage couldn't just become a farming land power like Rome. Turns out Rome was able to start navigating the seas a little bit better. So these path dependencies and organizational DNA, I think, matter a hell of a lot more than people realize. But Rita's right. if you're going to take on a transformation, then you need to have some sort of direction. I call that a hypothesis. What is the hypothesis? What is the new business model that you will have? You can't just jump from we sit behind distribution to going direct. It's very difficult to do it. It's not that it can't be done, just you have to get new talent, etc. And you see this in acquisitions where like a hardware company that's been operating with hardware, producing hardware forever will suddenly get the idea, let's do AI, let's do software, let's do digital. We could drive more revenue out. Problem, number one, you don't know how to make software. Number two, you sit behind distributors. You have no access to the end customer to even sell SaaS models. And here's a news flash, your distributors, they won't let you.
Right.
Why would they let you take their margin? Right? They want to own the customer. Why would they let you do that? So that's a long way of saying that, yes, find a strategic identity, have a hypothesis for what it should look like, what the business model should look like, what problems you solve, and how you solve them, but realize that you already have a strategic identity and that it's not easy to jump from X to Y. It's not just a question of charisma. It's a question of changing entire complex systems.
Interesting. Yeah, I thought it was a really good article. You should go read it at the Harvard Business Review or order yourself a copy wherever you can find it, Barnes & Nobles, whatever. But yeah, really good article. Congrats to Rita for having that in there. I don't really have anything to add. We'll just move along here, Mike. Let's see. This one I do have something to say about. Investors in BlackRock's $26 billion HPS corporate lending fund tried to pull 13.3% of the assets last quarter, and BlackRock sent them back 38 cents on the dollar, capping the fund's quarterly redemption rate at 5%, which means the rest of that money is just stuck. And they're not the only ones. Blackstone's fund hit a 20% or 10% withdrawal rate. Cliffwater hit 17%, and they're all capping it at about 5%. So there's a lot of money stuck in private credit right now, and we're seeing a lot of issues. You have any take on that, Mike?
Well, I think the key part there is the liquidity mismatch, right? So you would think, you're investing your money in this fund, in a private fund, right? That you could get your money out very quickly. And obviously BlackRock and the others don't want you to do that because they lose their own liquidity, right? So there's a mismatch there. That's a common problem. And I think it's partially to do with corporate debt cycles. Like, how quickly can they pay them back? Yeah. Can you sell that corporate debt to others? It doesn't seem very likely.
Right.
And if you took the extreme position, and I know they don't like to do this, but if you call forward a debt payment, that could bankrupt the corporate, and then everybody loses, right? So I found that part interesting because it's something we're going to talk about a little bit later. Actually, it's the next headline, right?
Yep.
Where when corporates are struggling to get liquidity and cash for capital investments, they're going with IPOs and they're taking out debt. Where are they going to get that money from if the investors themselves maybe are a little bit skittish right now about how do I get my money out if this is a bubble, right? You know what I mean? I don't know.
Well, it all has to go with who the bag holder is. And in this case, it would either be the private equity firms themselves, or in some cases that I read about today that are a little bit worse, those private equity are paying back their lenders with borrowed money. So they're now borrowing from banks based on their portfolios at prices that may not be correct. Who knows? But the bag holder is either going to be that private equity firm or it's going to be a bank. And so if this whole thing, if this run on the bank scenario keeps happening and people keep wanting their money out month after month after month, there's not going to be enough left. And there's going to be a bag holder that's going to either need to bail out or fail.
You think that's your money.
Yeah.
It's not, according to the contract, right? So they are reloaning your money out. And it's not just the case that you can go down to the bank, like my parents would have thought, and just pull it out. I think you saw a similar thing with Silicon Valley Bank, these mismatches in timelines and payoffs, and then the liquidity you need if somebody comes calling for the money.
Yeah.
That's just a problem in the banking system in general.
Well, we just talked about it in the segment right before when we were talking about Rita strategy, is that, great success happened with private credit
Yep.
5 years ago. So now 4 years ago, we need to increase that success by 10%. How are we going to do that? Well, we're going to loosen our standards a little bit. How are we going to do that the following year, increase by 10%? Well, we're going to loosen our standards a little bit more. And it just snowballs into then all of a sudden, whoops, 2008 housing crisis. I think something in the private sector is going to happen with either credit or equity right now, because private equity, same thing. People are trying to get their money out of private equity and they can't because it's tied up in companies that it gets invested to. However, there's a lot of fraud happening right now. There's a lot of people out there getting money that they shouldn't, because probably these standards are getting looser and looser and looser. So this money's vanishing. It's not getting used for good reasons. And I talked about it before that now private investors, small investors like me, I can go put my money in private equity in my 401k starting next year because of new administration changes. Really, at the end of the day, that's just making me a sucker if I do that, or you a sucker if you go in and take private equity out of your 401k because you're taking someone who's very wealthy in a bad position they can't sell, and now you're adding liquidity where they can't get their money out, but now you're going to be the bag holder. So I don't know. I have a very doomer take on all this, but I feel like the writing's on the wall in a lot of cases. We keep reading about it week after week after week.
Yeah, and for those listening, we are not selling gold or crypto, so that just comes from our own analysis of what's going on.
Or supplements. No, not yet.
Or supplements, not yet. Maybe in the future, but I think the other thing is people see the high yield, right? Yeah. Which typically there's a high interest rate, right? So you get a high return. Now, what is typically true about a high return? It comes with what? High risk, right? So there is no easy way to get rid of risk. Yeah. And if there's a high risk in the market, there's a damn good reason for it. So just always keep that in mind when you're chasing returns. I think that's one of the main reasons Jason goes with an index fund, is you just take the return of the market, because going into those other ones, it just carries too much risk.
It's not guaranteed, but it's relatively safe. Yeah.
You might get lucky, but most of us don't. Yeah. Not the little guys like us.
Exactly. So let's talk about some more debt here. Amazon secured a $17.5 billion bank loan on Tuesday, 2 days after it closed a $14 billion Canadian dollars bond sale for a total of $31.5 billion mixed currency and new debt within 48 hours. That company is targeting a $200 billion CapEx spend this year, almost entirely for AI data centers. And the total debt is now up 50% year over year. Mike, are you scared at the overall debt picture yet?
I think Amazon may be one of the only companies where you think they'll get the cash back, although they run very thin margins. My thought here, listening to this, was like, there's a land grab for capital right now, right? It's either through IPO, it's either through private VC, or now it's through debt. And we've talked about this a lot. I don't believe, and I don't think you believe, that the frontier models are a winner take all. They're not spending it on that.
Yep.
But what about the hardware?
Yeah.
Is that winner take all?
I don't know. We have a story coming up.
We're getting conflicting stories all across our headlines that, to me, is incoherent. It depends on what you believe about the world, and this is why this whole topic's so difficult. So the other thing you're going to be thinking about if you're Amazon, I need that cash now because the lead times for this stuff are long, and I need to guarantee that I have the hardware before prices spike or there's another supply crunch.
Yeah.
So I guess if you have that kind of access to debt, go for it. But debt carries, you better be a very disciplined company to carry that much debt.
Yeah, so we looked at Google last week, who did it, I think, more responsibly because they raised the money by offering shares. They created more shares and they got liquidity through investors versus Amazon's now taking out loans. In Amazon, I looked up the last time that they were cash flow negative was right after COVID, but that's because COVID created such high demand for them that they went into debt to catch up to all the demand and build factories, distribution centers, that type of thing. So it was very good reason that they did it. And I think they have a good reason here, but the fact that, we're going to talk about this here in a little bit, but the compute cost is going down. So I think originally everyone thought, well, we need to get AI because if we're the first ones with AGI, then we're going to own everything. We can just create everything immediately and instantly. We'll be the only one who do that. Now I think everyone's starting to understand that that's not the case, is that once you have AGI over here, they're going to have AGI over here the next month, and it's going to be even playing stakes there. So now we're racing to build compute centers where we can, earn billions of dollars a month, like Anthropic's paying SpaceX $1 billion for the Colossus compute per month. So there's a lot of dollars in the eyes there. But as compute costs comes down, and this happens with computers and hardware all the time, ever since computers started, they increase their capabilities and they decrease their price because manufacturing. Yeah, exactly. And it's going to keep happening, I fear, with AI data centers. So where's the revenue going to come from?
I think there are a few things we should talk about just briefly. What Jason's talking about is commoditization. We're not talking about commodities, right? I think people confuse these concepts. So commodities are typically like, say if you're a CPG company, you're going to be buying like snacks, you're going to be buying almonds, corn, etc. That's a commodity, right? Gold is a commodity, silver, copper, etc. What you're talking about is when you start getting into a volume game and a price war game, where it's no longer about value propositions that are defensible or brand, and it's purely price and volume, you've been commoditized. That's what people mean when they say you're getting into a commodity game, right? So that's important for you if you're out there reading these reports to understand that's what people mean. Later you're going to hear it in another story by commoditization. So typically in strategy, we talked about this with Rita and we talk about it here very quickly, that you don't want to be in a commodity game unless you have some sort of massive 10x, 100x operational advantage that no one has.
Yeah.
Amazon can do it. They've been one of the companies that can do it. They run razor thin margins, if you ever look at their margins, because they're so damn good at logistics, the back end, and at scale. Retail's brutal in general. Walmart's another company that's really good. You'd rather be an Apple with a strong brand, if they can maintain it, where you don't have to be as disciplined on the operations, but you better be damn good at differentiation, right? So that's what people mean there. And strategically, it's a race to always be differentiated if you can, unless you have some massive operational advantage. I think the thinking is it's difficult to keep an operational advantage. It always has been, but now it's even harder.
Yeah.
The other thing you said was, you'd rather issue equity as a company, right? Why? Because, well, you don't have to pay it back necessarily. Like if you go bankrupt, equity holders sit at the bottom, right? They get nothing basically. It's just pure risk. Whereas debt, the people issuing debt to you or lending to you, they sit at the top of the totem pole, right? So it's asymmetric, right? If you're a company, you'd rather issue equity instead of debt.
Yep.
If you're an investor, you'd rather be lending, right? Because you sit at the top of the hierarchy when it comes to liquidation than taking equity.
Yeah, it's complicated mechanisms that we have going on here, but we're going to see how it all plays out. And I'm excited for when that time comes. Well, let's move on now, Mike, to something that you bring up quite a bit, and that's Harley Davidson. Indian Motorcycle's new CEO had spent 26 years at Harley Davidson before taking the top job at its largest rival. This week, he started an attack ad campaign slamming Harley Davidson for going electric, offshoring to Thailand, and embracing diversity, equality, and inclusion, DEI. It seems to have backfired as Harley's stock has rose 6% this week. What's kind of your take on this feud of the motorcycle giants, Mike?
I mean, we've talked about Harley's brand identity problem. And last week we talked a little bit about woke. I called it more culture wars. And you right now want to avoid culture wars. And the thing with Harley is its customers are aging out. And so it's trying things to try to find that next generation of customers. One of them being perhaps having a more DEI focused approach, going for electric bikes, right, et cetera, trying to appeal to younger generations because they have to do something.
Yeah.
I mean, that we can say. So I think the Indian CEO thought that you could enter the cultural war fray and then do like a pro-America thing. And this thing backfired in the worst way, right? What it did is it exposed them to the following counter move, which was Harley seems to have struck a deal with Trump. to give an announcement, or we're bringing back production from Thailand to America. So then you look pro-American, and the Indian guy looks like an asshole.
Yeah.
And I think they missed the message. The message was stay out of the culture war. Just sell your damn bikes, right? Experiment, try new brands, etc. Stay out of the cultural war fray. That's the message. People are tired of it. I think that's the customers are tired of the politics. They're not wanting more. At least that seems to be the response from people.
Seems to be. Yeah, I think this started with a MMA fighter. He had mentioned his dissatisfaction in Harley, I believe, in favor of Indian. And then Indian hopped on it. They had an opening to sell their product there because of him. And instead they doubled down on his insults, and it's not worked out well for them. I want to point out, I found this super interesting, that Indian has been spun off from Polaris, its previous parent company, and it's been sold to private equity firm Carolwood LP. So now, I think it's Matt Kennedy is the CEO now. He was installed by the private equity firm. He is the private equity CEO play, and this is his, choice in ad campaign. This is where they're going with the company, and this is their, attempt to capture some market share. Things don't go well for most companies when they go into PE. I mean, historically, they don't make great companies, I don't think, maybe occasionally. But, they're known for making efficiencies by using the same software across their portfolio of companies, things like that. I don't know. It just seems like an odd... I understand why he was doing it and what their goal is, but it's just when you actually look under the surface, everything he's saying about Harley, Indian has done too. And now Indian's also not its own company. It's private equity on top of all of that. So
let me tell you another reason I think it's problematic.
Yeah.
It's because of American culture. I don't think we like people winning by putting others down. I think we like it when they just win because they're better, right? And I had a teacher one time, I won't mention the culture, but he said the distinguishing factor between Americans and this other culture was, in the other culture, if your neighbor goes out and gets a better home or a bigger truck, what do? You do everything in your power to destroy the truck and the home. And that is not how Americans think, right? So if your neighbor goes out and gets a bigger home or
I need
a better truck, I need a better one. Right? And if I have to take credit to do it, I'm going to do it. So I think that's partially what's going on there behind the scenes. You can correct me if I'm wrong on that take. But I really feel like people don't like bitter CEOs spitting out vitriol. They may not even like Harley.
Yeah.
But they also don't like that.
Yeah, I agree. And the fact that this is now very political, like it's, we're on this party view or that party view, so therefore we like this motorcycle. It's just a weird place to be for these companies that are trying to grow.
I'm already so damn annoyed by I bought this vehicle before I knew what Elon was.
Yeah.
They just enjoy your vehicle.
Yeah.
No, I'm not thinking about that when I'm driving by a Tesla. Oh my God, are you embarrassed that you bought that before you knew about Elon? Who cares? If it's a good car, it's a good car.
Well, when that started happening, it was because, not that I am in favor of it, but it was because that people were drawing obscene drawings on the side of Cybertrucks specifically. It was right around the Cybertruck launch.
So it was a defensive mechanism. I get it.
Yeah. Anyways.
That's long past, right? People aren't burning Teslas in your driveway.
Indeed. All right, let's go now to the Firehose rapid fire news stories. Jeff Bezos just closed a $12 billion Series B at $41 billion valuation with Prometheus, his AI startup that claims AI can autonomously design and manufacture physical objects like jet engines and drug compounds.
Yeah, I think the thing that I took away here was the ambition is actually to replace large amounts of engineering work, which probably means engineers as well. We were just talking about this today in my team. It's probably not new engineers that you're going to keep around. You'll probably still keep around those senior engineers. As the guy said today, they know what good work looks like. It's a little bit of a security thing too, have a little bit of certainty, and some senior person there looking at it. The thing that was interesting though is they're going to use these systems to design physical systems like jet engines. I mean, would you trust that? Will regulators trust that? Because that takes a ton of testing to get through I think it's FAA regulations, right?
You think so?
It's very, very difficult. It can take, 5, 6, 7 years and onwards. So how will AI play into that? I don't know. The thing that I wanted to mention with this one is, you know how we heard AI and even vibe coded stuff's going to get rid of SaaS? Now they're taking it farther, VCs and investors. AI, no. Physical AI. The moat is in physical AI. Now, what they mean by physical AI, it's very difficult to detect. Mm-hmm. And people are saying you should invest in Prometheus because it's physical AI and there's a defensive moat there. But it's still just a software.
Yeah.
But I think the software is operating on physical things is maybe the point there. But that just tells me that term is a little bit too abstract, physical AI. And then I think what we're learning as we're out there talking to customers is that it's not that software can't have stickiness. It can, but it's got to be deeply embedded in workflows, right? And I still think this is very superficial investing on behalf of people. They're underestimating channels, networks, and the stickiness of workflows. Whether that's in hardware or not, because we just talked about hardware can commoditize just as easily as software.
Yeah.
So the fact that it's a physical thing, that's nothing new. We've just talked about Rita McGrath, and since post-World War II, we know how to produce hardware things at scale.
Right.
That's commoditized, right? So those are just some thoughts I had there. And you're going to see me come back to this question of physical AI and commoditization because these headlines are all over the place.
Yeah.
On that topic.
They are. Anthropic CEO Dario Amodei has just one direct report, his chief of staff. Everyone else on the executive team reports to Dario's sister, company president Daniela Amodei. Mike, what do you think about their structure?
I'm not a fan of drawing any lessons from structures like this. I know people are going to look at it and they're going to say something like, he only has one direct report. It'll be some CEO and some other corporate. We should do that.
Right.
Yeah, and then have somebody else have to deal with all my direct reports. So I don't think, and you heard Dan Thomas say this, and I write about it in my book, I don't think you can draw lessons from that particular organization because it is particular. And he may just be recognizing the fact that he's more comfortable in technical details and not commercial.
Yeah.
And so he's handing out the commercial to somebody that handles it better. Yeah, kudos to him. I just thought it was funny because he has one direct report. If you looked on his X, you know how many followers he has?
No, how many?
He has like millions of followers, of course.
Yeah.
Do you know how many people he follows?
One?
Not even the chief of staff, right? 0. Incredible. I don't know what that says about him. But
yeah, I don't know. I think this came from the Bloomberg documentary. They went into Anthropic headquarters this past week, or at least this past week, and sat down with Dario and talked about Anthropic for a long time. So I think it came from this revelation. I think you're right. There's not much we can necessarily learn from that. I think it does free him up to do the things I think he said, focus on the more technical aspects, the company heading, and general vibe of the
Makes
company.
sense.
Yeah, I mean, that's what he should be doing. And also, they're very unique because all 7 of their co-founders still work there today. They have a very, as we were talking earlier about centering, they've got a very strong center, it appears, and it seems to be a very powerful thing for them, and that is safe AI or transparent AI, and that's how they were founded, and they still have, because all those co-founders are still there today, and it seems to be still a prevalent thought process for them, and it seems to be very powerful because it's working really well for them. They're just skyrocketing right now.
So unless you have those 7 co-founders, don't take any lessons from this. That's my point.
Yeah, it works for them specifically. You're right.
It works for them specifically, yeah.
OpenAI is backing Poetic, a startup that turns plain language instructions into custom enterprise software, rather than chasing unreliable AI agents. It writes deterministic code that does the work predictably.
I thought software was dead. Right. Isn't that what we just heard? Yeah. And now we have purpose-built software that OpenAI is investing in. The company is building its own programming language to automate processes deterministically. If you don't know what deterministic means, it means if you have an input X, you always get output Y by law.
Yeah.
That's what that means. So obviously, in safety-oriented processes and other automated processes in production, you must get Y every time you put in X, right? And so that's what they mean by deterministic. And what they're telling you is you can't trust the base stochastic LLMs to do that. That's what they're telling you. We had to build an entire system around it. Jason, we know that well.
Yep.
For what we're building, you have to engineer around hallucinations, around sycophancy. And in this case, ours is a more speculative craft strategy. This is automated production processes, potentially. You can't speculate.
Yeah. It's interesting. The interesting bit here for me was just that, OpenAI has a lot of agentic stuff built up around AI agents, and now they also have something that's built against that's anti-AI agent, essentially.
It's called hedging, isn't it?
Yeah.
It's called hedging.
Absolutely. All right. Meta is leasing a new 168 megawatt data center in India, built and run by Reliance to feed its own global AI compute needs. It's Meta's first data center in India, and it's powered by renewable energy and desalinated seawater.
Yeah. I think the interesting thing here was a lot of the business that they're aiming this at, this agent, is through WhatsApp. And that is true in that part of the world, because I used to live in Singapore. Mm-hmm. They run so much of their business through WhatsApp. It's incredible. Like just talking to sales agents or customer agents, it's all through WhatsApp. So that started to make sense to me, what's going on there. But again, this is the refrain of the show. This is a rush into workflows, customer experience, competitive intelligence, etc., with agents, right? Yeah. So it's just not the case. And I keep hearing this over and over and over. And if you can't hear it, I'm annoyed by it. It's not the case that general reasoning models are going to dominate workflows. That's why you need agents in the first place.
Right.
That's what they're being built for.
I'm looking for, I think I cut it from I didn't make it into the show, but there was another company that's also now moving into India at the same time Meta is. And it just seems like everything's happening at the same time, where all these different companies are, we should be making big plays into India right now with AI. But I mean, that goes hand in hand with everything we've been seeing through this whole process, actually.
Yeah. Yeah.
All right. Well, let's look at Waymo now, who launched a paid subscription called Waymo Premier. It's charging riders $29.99 a month for 10% cash back on rides, plus priority pickups and free cancellations. Mike, do you think they're going to have success with the subscription model?
Is this the Amazon Prime of automated driving or robo-taxis?
Yeah.
So what it looks like is you still have to pay for the thing, right? But you have to pay for extra benefits like not waiting in lines and stuff like that. I guess my question is, will corporates pay? And my friend and I talk about this a lot. A lot of loyalty programs are propped up, particularly in rental cars and airlines, by execs that are using company cash to build their own personal status. So if you want your loyalty program to succeed, target the corporate execs.
I mean,
it's one of those principal agent problems where like you can benefit at the company's expense. But
yeah, that's also an interesting take with the 10% cashback feature, because that's something that you can put on your company card and it's your account, and then you get 10% cash back. So that seems pretty rampant for abuse right there, but we'll see how it goes. The thing about it, it's only within certain markets. I think it's only within San Francisco. I can't remember the others, but it's only in a few markets right now. And it's
where Uber is not, is essentially what I read.
Yeah. Yeah. The ones where they're embedded into Uber, like Austin, for example, those aren't the markets it's launching in. Adobe CFO departed for Marvell Technology, sending Adobe shares down more than 5% on Friday. Marvell, if you're not aware, is a semiconductor. I would call them a designer, because they're not actually fabbing the stuff themselves. They're doing the design and having them fabbed at TSMC, for instance.
Correct me if I'm wrong. The article mentions that they're in a freemium model. They're pushing freemium, but they've always been freemium.
Adobe?
Yeah. Because you could, freemium in the sense you get the basic PDF skills, right?
Yeah,
for free.
Sure.
And then they upsell you to, if you want to do art or digital design, whatever.
Yeah.
And you could obviously enter those directly with subscriptions too, right? I mean, my wife had done that in the past. That's a difficult business, but the fact that they're going to push it more means it may be that their strategic moat, the strategic defensibility, the value proposition is getting more and more difficult to defend. And with AI, with the visualizations, the PDF capabilities, design capabilities, what's left for them? That's an example where their moat may be disintegrating.
Yeah. I use Adobe Premiere. I use Adobe Premiere to edit this show. It used to be better. I don't know how to say it. Like, they've added new features that just don't always work, and it's really frustrating. And there's a lot of stuff that should be there that's not there. And I've not used another product to know if it's better or worse, but not really happy with the amount of work that's been put into Premiere itself. And I don't know. They used to have, you would pay $700 for Adobe for Premiere or Photoshop, whatever, and you would do that once every 6-7 years probably, depending on your business. And now it is subscription, and you're paying, I pay $30 a month for Premiere, and you do that per app. I mean, they give you a little bit of a break if you buy more, but it's still a very expensive thing. I don't know. It's just a weird, I don't like their model. For me, I would much rather just do a one-time, hey, here's $300. I'm going to keep this for the next 5 years and whatever. Yeah. That'll be my preference, but it works for them. It makes their revenue a lot more predictable, obviously. So good for them. The through line that I saw here, which is backwards of what we were talking about earlier, is that man is leaving a software company for a hardware company that's focusing on AI chip production, essentially. So
again, which way to run?
Exactly. We don't really know. We don't know.
Or software.
Yeah. The private equity thing is largely because their money's tied up in software companies, and software companies are going down largely, or they have been. So now if they go back up again, maybe the private equity
to be clear, in the stock market they're going down. That doesn't mean their business is failing.
Correct.
Not yet.
Correct.
Right?
Yeah.
A lot of that's hype, just the wrong direction.
But it causes on big scenarios, is my point. Yep. Okay.
That's right.
Hackers exploited a critical Oracle vulnerability in its software, PeopleSoft, to breach over 100 organizations, stealing hundreds of thousands of student records. The group Shiny Hunters has claimed the hack.
Guess they didn't have enough time with Fable and Mythos, right?
Yep.
Otherwise, they would have caught this. I think the important thing here was a zero-day exploit, which actually was what they were advertising Mythos to help out with.
Yep.
So, 0-day means simply that you have no time to respond once it's discovered.
Yep, exactly.
On the same day. So, yeah, I don't know. I think the capabilities of cybersecurity threats of the hackers is just going to get stronger.
Yeah. I found it interesting.
Opportunity for cybersecurity businesses, I guess, right?
Yeah. Well, what I read is they specifically targeted universities because universities had a specific, this PeopleSoft, which also ran into older type of softwares that, butted up against other old software. And so it was vulnerable specifically. And so that's why they made that play. Just as
what do you know? Universities are behind the times. That's where we go to always move the world forward.
Yep.
Yes.
Exactly. All right, let's talk about a couple of robotic startups here. German humanoid robotics company Neura Robotics closed a record 1.4 billion Series C backed by NVIDIA, Amazon, Qualcomm, and Bosch, targeting the production of millions of robots by 2030 via a shared AI ecosystem called Neuraverse.
Yes. That 1.4 billion looks really small now, doesn't it? After all the big numbers we've been throwing out.
Right, yeah.
This is physical AI. This is probably the actual physical AI because we're talking about German robotics, humanoids. I'm going to bring you back to the topic of Europe, what's going on there, industrial costs. It's an industrial heartland, right? Particularly Germany. But their energy costs, their labor costs are out of control. Regulations are difficult. And so we've already seen many pilots of humanoids in the German context. I think we had Siemens, and we've seen some others there as well. Yeah. So they clearly have a market right there at their home. And Germans, in general, the German economy is really good at robotics and hardware.
Yeah.
Like, if you want the top of the line where you might have a moat for at least a few years, go to the Germans.
I agree. Let's talk about another one. Robotics startup Thecker has raised an even smaller $85 million. It's still a really big number. To build a factory robot that doesn't specialize in any specific task Instead, it's designed to be reprogrammable across multiple manufacturing jobs. I think that's a great idea.
I did too. So the reason it's a great idea is because you would think you don't want to sell a robot like this because you want one that just hops out of the package and does what it does, right into the factory. Problem. Not all factory processes look the same. Even in the same company, you can establish a global factory process. On day one, everybody's adhering. On day two, you already have deviations. And that's simply because of natural variations in production, errors that arise. So it would make a hell of a lot of sense to have a robot that your own engineers could then program for your particular processes.
Absolutely.
So that makes all kinds of sense to me. I don't know what the one above was, if it's like a general purpose one or specifically aimed at like we saw one earlier, was just piece picking.
Mm-hmm. Yeah, very
right?
specialized.
Is it specialized? Yeah. That's also not a bad idea. But piece picking will run into different piece picking processes. So I think you're going to see some interesting things here. I know companies like Siemens are good at this kind of thing, like the programming, edge devices, etc., of these sorts of generalized robots.
Yeah. This also takes a lot of networking to make all this happen because everything needs to be connected, talk to Wi-Fi or hooked up directly to Ethernet, whatever. Very interesting. Let's move now to Goldman Sachs, who had a trading desk note this week, which argued that as token costs collapse and open source models close the gap to the large language frontier models, that investors need to start treating compute like a commodity, not a defensive moat.
We just talked about that.
Yeah.
So is it physical AI or is it SaaS? What are we supposed to do with all this information? I think they're correct, by the way, that hardware, you talked about it, it's happened over time, Moore's Law, et cetera, right? It does get commoditized over time. So you got to be like NVIDIA finding new moats all the time, right?
Yep.
The next thing, the next big thing.
Which is what Rita preaches as well, is it's dynamic, keeps changing.
It's dynamic, it keeps changing, and the value is shifting into things you can't necessarily value, those workflows, right? Intangible assets.
Yeah.
That was really the crux of her article as well. What I found more interesting is what happens, and we talked about this on an earlier show, if open source models keep getting better. That would directly impact the valuations of Anthropic and OpenAI. Why would I want to go with OpenAI and Anthropic models if the local model can be just as good? And if there are privacy concerns, I know a lot of the customers we're talking to in Europe, it's problematic that you have to talk with Anthropic's API.
Yeah.
But if it were hosted on site with an open source model, even as privately trained, you have an advantage. So I think this race is way far from run. And with all the cash, we saw Mark Cuban talking about this, that they're just, well, he used a very interesting, colorful term, that they're spitting out there, replace the P. With all the cash they're spitting out into the ether, I don't know how they're ever going to earn that cash back. If, and I think Goldman's pointing to that, if token costs keep dropping, if the open models keep getting stronger, if local inference gets stronger, I don't know. I thought it was a really good note.
No, yeah, absolutely. I mean, if we're seeing hardware prices skyrocket right now, this stuff has a lifespan. So, the B200 chip from NVIDIA, the best AI chip they make, what has a lifespan of, 3 years in a traditional data center? That's what it's estimated to be, that you're going to have to replace that. And the hardware price just keeps going up and up and up. And it's not just a one-time thing. You have to replenish it or fix it if it breaks. And as that goes up, then goes the price that it costs to compute. So your compute needs to go up. And if compute is plummeting, then now you're in a situation where the capital you've spent just can never be recouped because there's just not enough. There's not enough demand anymore. I don't know. It's an interesting situation. We're going to have to see how it plays out. And I, unfortunately, think that so many companies have gone so big at the same time that, it's going to be whoever is left standing at the end of the day. That's why Google is my front running pick because they have a really strong position with not just their what they have, with Google search and YouTube under their belt, which is great sources of AI knowledge for training. So they have a really good portfolio and book of programs so for AI to work with. They also have a ton of cash right now. I think they're one of the most cash rich companies. So is Apple. And I think those two companies right now are looking the best to win in the long run when, the chips fall where they may, for lack of a better phrase.
Yeah, it's like the electric vehicle market. Just so much investment going in. There just aren't enough cars to go around.
Yeah,
so they will be losers.
Yeah, that's okay. Just make another company and have that company buy all of your electric vehicles, right?
Yeah.
Okay, that was a good fire hose. Let's now go take a look at our main topic, SpaceX. History was made on Friday, and we can see clearly now that never doubt Elon is a phrase that is not going away anytime soon. SpaceX IPO'd at $1.35 per share for a total valuation of $1.75 trillion and finished the day up 19%, pushing the company over a $2.25 trillion market cap. Elon is now valued over $1.1 trillion in personal wealth. I saw people lining the streets outside of NASDAQ on Friday, Mike, and I can't recall an IPO that was this significant in my lifetime.
Yeah, the number is astronomical. But I'm going to come back to it. I mean, how do you justify the valuation? I mean, the market is what the market is. The price is what the price is. It's the price that people are willing to spend for the stock. So I'm not going to hate on that, right? That's just the market. I'm just wondering what the people that are buying this, that drove it up to 2.1 trillion on the day, up $25, right? What they're analyzing. Because I still don't understand where the cash is going to go and where it's going to come from. The Starlink one, I've told you, I think that's an interesting play. That could produce lots of cash, could disrupt traditional carriers. Musk himself has said XAI is not an actual competitor for frontier models. He said that in his court case with OpenAI and Sam Altman. So what's its role? What about Cursor? What about Colossus? What about SpaceX? I get it. You can ship rockets up into space at scale and better and more cheaply than anyone. But who's going to pay for all that?
Right.
Maybe we talked about it. Maybe it's going to be partially a shared resource with Starlink. So this reminds me of VC. VCs are notorious for not betting on the actual business. They just bet on the person.
Yep.
This reminds me of that, right? Yep. Like you're betting on Elon, and there's the saying out there, I know you love it, Jason, never doubt Elon.
Yep.
And the bet is, we said how old he is? 55, 56?
54 last time I checked.
Yeah, 54, 55. You're betting in his next 30 years at max, he figures out how to drive cash out of all that, or what you might say, draw in even more capital with more grandiose ideas. Yeah. Why Mars? Go to Jupiter and go to one of the moons, So that's what I was looking at here. Congrats to him. First trillionaire. I mean, if it's actually paper wealth, it may not be. I don't know how liquid that is, right?
I don't think so, but and I don't want to get into of how people spend money when it's not physical cash. But I don't think it's paper wealth, but I think it doesn't matter that it's not paper wealth. I think he can still get a loan for whatever he wants. I've been preaching about fundamentals and how they're not there for Tesla, SpaceX. This doesn't make any sense for a long time. A couple of weeks ago, we looked at the total market cap for the defense and aerospace market cap, the entire market cap. All the aerospace and defense companies are worth less than SpaceX was when it IPO'd. And now that it's gone up, it's worth much less. And it's crazy. It's crazy to me, and I think you're absolutely correct, is that people are... Yeah, go ahead.
Can you define fundamentals? Because people say this all the time.
Yeah.
The fundamentals aren't there. But are they thinking like astrology, or what are you specifically talking about? And then I'll tell you kind of what I think about when I think about fundamentals.
Yeah.
And then I think we need to say that to people, because we'll post this on YouTube, and somebody will tell Jason, the fundamentals are absolutely there.
Fundamentals would be P&L, for lack of a better terminology. It is profits versus losses versus revenues versus free cash flow. If all that stuff adds up to we're making money, then you can calculate how much money a company is going to make in what period of time going forward in the future. Therefore, you can determine what their market value should be and what that company is worth. And if you did that with SpaceX, you're going to get a much lower number, as we saw last week with Morningstar, who did that analysis and came at 780 billion, not 1.75 trillion, less than half of this number. So those are the fundamentals. They're the numbers that you can look at and make predictions based on what's happened in the past, what's happened quarter over month, et cetera, et cetera. The actual dollars that you can look at on paper and do some calculations that make sense and they're logical. Those aren't going on here.
Yeah, let me go deeper.
Yeah.
So the P&L is the result. It's downstream from something that produces the cash. And particularly, you know this, when I talk about my book, we'll talk about this, that one of the big mistakes is governing companies by P&L instead of the business model. And Warren Buffett in particular looked deeper than that into the actual business model and strategy and positioning. So to even understand, because to be fair to Elon, the P&L doesn't really exist yet.
No.
This is a projected P&L. Right? So you're taking it on faith, in my opinion, that those things that we're listing, SpaceX, Cursor, XAI, Starlink, Colossus, et cetera, there'll probably be more acquisitions in the future, that there will be a business model that produces cash. Now, what do I mean by a business model? Because people often confuse this term. They think business plan. No. When I mean business model, and if you're asking me as a former VC of a corporate to invest in something, you got to tell me the following things. Which customer problems, which customer segments, which solutions, which value propositions, through which channels, which pricing, which revenue models, through which supply chains. And you go on and on and on to how do you productize that and industrialize that. I don't think most investors are looking at that, unfortunately. And that's probably why Warren Buffett was able to stake out his position, because I think he did look into that stuff. Maybe not as deeply as I just said, but he had probably an innate sense of how to do that. I just don't know how you can look at this one and say you understand that.
Right.
That's what I mean. You're not betting on the fundamentals. You're betting on what I think is a mythology around founders.
It's an irrational market.
Well, he has shown he can create value at the stock level. Yes. The question I think you're always asking is, can he do it, produce cash out of a business model? We don't know. That's open. I mean, I will give him credit on Tesla. He took that bet. Maybe he didn't start it. I know you'll say that. But he did disrupt an entire mobility industry. I saw the arrogant engineer saying he has no chance. Well, yeah. I would argue he opened the path for the Chinese ones by reimagining the vehicle to a software-defined vehicle. So that's what I always mean by fundamentals. That's what we're always trying to do on this show, is like go beyond, do you think this is justified? Like tell why, like why do you think this is not justified or justified? And I'm perfectly willing to say I could be wrong. But looking at what's in front of us right now, it's hard to see a repeatable, profitable, scalable business model out of that. Unless he somehow is a magical orchestrator of all that. He might be. We'll find out.
Maybe we will have 1 million person habitat on Mars soon. I don't think that's going to be the case. So I don't know. And, Blue Origin just got all the moon jobs from what I heard. They got all the contracts for the moon base that we're making.
And I think this is what we always have to mention. We're saying we wouldn't buy it at that price.
Yep.
Yeah. That's not the same thing saying you should never buy it.
Right.
So would you buy it if the price fell? And to what price? Because I have a feeling this one's going to drop.
Yeah, for sure. I think, though, we have a lot of people who are savvy and know what they're doing and know what fundamentals are, but they also understand that it's an irrational market, and therefore they're still betting on it because you just never doubt Elon, and it's going to go up because everyone is operating under this assumption that it's always going to go up because it's Elon, and also because he pulls in the public like not a lot of other businesses do. You're not getting a lot of private investors from these other companies like you do from Elon. I don't have people sending me, got my pre-order in, sending me the text, the screenshot of their pre-order for any other company besides Elon companies. So that kind of momentum is very real. And I guess it is something that you're going to have to factor in going forward. And maybe I'm just looking at it wrong and not factoring in the digital media, social media age in stock investing, because I guess it does play a part. I mean, we look at Wall Street Bets, we look at what they've done with, they lose a lot of money, but they've made some really good plays and some really interesting plays where it's been social movements essentially that cause one stock to go up and others to go down when there's a short squeeze, etc.
And whether you like it or not, this is the counter argument to us. We're trying to tell you, if you're going to pay that price, make sure there's a business model that can produce that cash. The counter argument is quite simple. If there's a willing buyer out there who will buy it for more, who cares?
Yeah.
I'll get my return.
That's exactly right. That's what I'm preaching with the private equity stuff. Don't invest in that when it comes to your 401ks, people.
And I would have a hard time saying that the stock market has ever been fully attached to the fundamentals, right? You're doing the best with the information you got, and part of the issue is it's hard to detect what future information will look like. What will that future P&L look like? What will the future cash flow look like? You're just guessing.
The question that's been going on in my head lately is, has the world always been this sleazy, like scummy sales tactics? Has it always been that way and I'm just now aware of it? Or is it getting more so headed in that direction? I don't know. I don't know if there's an answer.
Hey, have you ever heard of Tulip Mania?
Yes. Yeah. That was what, Norwegian flower market, I think?
Dutch. The roses, right?
That's right. Yep.
Bubbles and speculation have existed from the beginning.
Yep.
I mean, there are people out there who claim there are no bubbles. It's just the current price based on the information you have. There are academics out there that will say that. Most people who have common sense think of bubble as what you're talking about. The prices reflect no fundamentals. They can't. They're detached.
Yeah.
So I think this thing has always existed. And is it sleazy? Well, I'm of the belief that you invest in index funds because I think you can play that game a little, maybe even get lucky. You'll also get burned like hell in that game.
Yeah.
Because for every Wall Street trader that takes one position, someone else lost their shirt, man.
Yeah.
So, but that's like the function of the capitalist market, like it or love it. It's helping mediate those prices. And sometimes I guess we end up in situations where, you and I will complain. I don't know how they're related to the underlying asset. We saw that in the housing crash as well. But it's nothing new.
Right. Yeah.
You would even get this in dark economies. Like in the Soviet Union, you would get stuff like this, right? But on the black market, right? Yeah. Imagine you wanted to listen to the latest, whatever, Rolling Stones, how much that would cost you privately. Yeah. I'm just making that up, but that did exist.
I don't know. We're going to just dissect that, I think, a lot more over the coming weeks. So stay tuned. All right. Let's move now to Anthropic, who launched its most powerful public AI model this past Tuesday. And by Friday afternoon, the U.S. government had ordered them to shut it off. The feds issued an export control directive against Claude.
That's a good Freudian sleep. Extort control.
That export control directive against Claude Fable 5 and Mythos 5, citing national security threat from a discovered jailbreak. Anthropic complied and then immediately called the directive legally unsound. What's your take on that one, Mike?
Okay, I'm going to both agree with Anthropic and then criticize them.
Okay.
So let's start with the critique. You yourself were promoting how incredibly powerful this was, particularly around cybersecurity, that you got your little coalition together. If you remember,
Yep.
a couple episodes back, you were advertising that you basically wanted to be regulated. Well, you got your regulation, right? And the question is this desirable or not? This reminds me of the Streisand effect. So this could either backfire and you get regulated in a way you didn't want to, where you have to shut down your latest model, or it's a good advertisement for, yeah, my model is that good that the US government shut it down.
Yeah.
It is that powerful. So is it that or the other? Now, so this came directly from its own safety warnings. Is it good marketing or naivety about what regulations are and who politicians are? Let me go to the other side. Let me put on my libertarian hat for a second. I'll play a libertarian here. This is not good for the rule of law, right? So if you care about markets and their functioning, typically you can sympathize with Anthropic because you need laws to be in place already.
Yep.
And they need to be publicized. This seems like they got a private memo, which is directly targeting a single company. All kinds of legal issues there, if you ask me. The other is you want to have laws that are posted up front so that you give people time to comply, and then they can start regulating their own businesses to comply with you.
Yep.
So what is not good, if you're in an AI race, as we claim to be, a geopolitical AI race with China and the rest, to have an erratic policy. One day it's whatever my whim is, the next it's another. And maybe this is the result of the art of the deal kind of thing. Are they trying to get something out of Anthropic team there? Is AI going to get wrapped up in my mind, destructive protectionist trade wars? Is AI even really on the controlled substance or commodities or whatever you call that thing list? Does it count? One LinkedIn poster tagged me and said, this is a massive opportunity for the EU. I'm like, no, they cannot get their stuff together in the EU. Like, who's going to lead that? Who's going to capitalize it? Is it an opportunity? Yes. Will they capitalize? Doesn't seem so. They haven't been able to yet. And the thing about America is we often succeed despite ourselves. And this is probably one of those cases. But I really think probably what we're going to need here, and I'm not a big fan of jumping out in front of regulation. You know that about me.
Yeah.
But it would help if there's like a framework with some basic rules of the game that are predictable and don't just spring up on, was this the Commerce Secretary's whim? And you're applying export controls to it and using national security to justify it. So that's the most political you're ever going to hear me. But I'm saying it from the point of view of an investor and a company. It is extremely difficult to deal with erratic governments. And that's not just this one. This has been the case for the last 5, 6, 7 presidents, as in my mind, the executive is getting a little out of control with this type of stuff. Fiat, executive orders, they're just out of control. You switch regimes and you get a whole new onslaught of orders, and it's just not helpful for business. So if you want to win the AI game, have a legal framework that makes damn sense.
Yeah. I mean, I
took that in a different direction, I think, than maybe
no, I agree with everything you said, actually. It is a bit of a conundrum. Ideally, we're just moving so fast, and government moves so slow, and it moves slowly by design, I think, because everything needs to be thoughtful. That is actually
this is a case where it should have the framework, but move slowly and not be erratic.
Yeah. Yeah, it may be we can learn something. I don't know. But if you go and do what the EU did, then all of a sudden we're going to be playing catch up. Yeah, exactly.
Yes.
And there's a race. So I don't know. I don't know the right answers. There's going to be someone out there smarter than me who probably also doesn't know the right answers, but they're probably more qualified to make it than I am. Thank God.
I think the way to think about it with law is, again, the EU law is the Roman law. We talked about this before. And it's typically been code, right? So you write down all of the rules of the game and then have people comply. It's like ex ante. Then the courts interpret that law. They just apply it. In the U.S. system, Anglo-Saxon system, the common law system, it's different. You do have statutes like that, but you also generate case law as you run.
Yeah.
And probably the answer is some combination, like some basic framework across all the states. Because the next thing that's coming, I can guarantee you, is states will get, especially now that this is boiling over into culture wars, it's going to be California's going to have one set of AI restrictions. Texas will have another, Florida will have another, New York will have another, Illinois will have another. They'll be conflicting. It'll be kind of bluish versus reddish. Then you're going to end up in, commerce clause type zone, and where California laws may discriminate against other states, and then that's not helpful. That's not the sense of experimenting with the law. That's ending up in a chaotic situation, much like the EU. So I don't have the answer, just like you said, but that's kind of a way to think about it. Some combination of deterministic statutory law and sort of this bubbling up of law that we've had in the common law. It's some combination, and there are much smarter people out there in law that can go much deeper into that.
Yeah. What I know is that the government is giving Anthropic a lot of free advertising.
Yes.
That's what I know at the moment. All right, let's move now to something that I thought was an absolute dud, and that's Apple's WWDC, their Developer Conference 2026. The headline wasn't a new product for that conference. It was a partnership. Apple has rebuilt Siri from the ground up, powered by Google's Gemini, in a deal reportedly worth $1 billion per year. The company that spent years insisting it could do AI on its own is now running its flagship feature on a competitor's model. Mike, we've talked about Apple's AI plays for a while now. Anything that surprised you from this conference?
Let me start with, I'm just going to read it because it's a brutal TechCrunch take from the article. Apple's racing to catch up while core software frustrations have accumulated. Bad design overhaul, broken research, failed file sharing, inadequate health app, AI is behind, search is behind, blah, blah, blah. It goes on and on and on. You don't want people writing that about you, particularly with what I said. You're a brand. You're known for having, well, you may disagree, having best devices, best hardware, best software out there. At least that's your brand. Best user experience. Turns out you're failing, at least according to this writer, across all of those, right? I think a lot of people have criticized Apple for falling behind in AI, but you know what I'm going to say? Their business model, and this has been their identity, like Rita says, is brand, customer experience, owning the channels, owning the app store, owning the devs that have to put their apps onto their app stores to get to those paying, important Apple users. They're premium users. So if Apple, given all its struggles, has decided we are not good at AI, actually, that's not our strength, it's not our capability, it's not a bad strategic move to partner with someone who is, which goes to your point earlier. Maybe people are underestimating Google in this whole game.
Yeah.
And you're saying they might have the capabilities to win this thing if there were a winner take all. They're at least primarily positioned with cash, customer channels, B2C channels, growing B2B channels. And so, again, this is a classic make or buy. Do you make it on your own when you've been struggling with search, file sharing, all this other stuff? Or do you partner with someone who already knows how to do search better than anyone on the planet, whose Gemini models are getting better by the second, who they're multimodal? That's where they're going with Omni, if you remember. That's going to be probably the experience an Apple user is going to expect. So I don't see that as a weakness. I see that as, you might look at this as a antitrust issue coming up, that people might look at this. Should those two really be partnered? But if you really looked into the fundamentals of their business models, it's just supplier, relationship, right? And buyer relationship. The thing I liked, and you know what our application is, where we're talking about strategy, and we're building it to comply with EU regulations, compliance, data concerns. I like the privacy-centric thing, if they can hold to it. And as long as there's no jailbreak for government and the rest behind the scenes. So I'm a fan of that. The quote was, data is only used to execute the request, and that's it. And I think this is going to be a big problem for Anthropic. They just had an announcement this week, earlier, where they said for those neuro models, they're actually going to start collecting data, even if they maybe destroy it after 30 days because of the concerns around Fable and Mythos, right? So I think this data and data privacy thing is going to be real, particularly with the culture wars boiling up.
Yeah.
And with EU in general, it's always been. And our approach is to comply with the EU, and then you meet everybody's standards, right? I mean, you get a regulatory moat for real, right?
I think someone in the EU got fined 400 million this week for a data breach. It didn't make the story, but I was reading a little bit about it. So, that stuff, it costs companies a lot of money when these things happen, potentially, because they can get fines. It costs them, of course, class action lawsuits. It costs them customers sometimes. So all those things are real tangible losses of money. And so it's going to be real important it's a really big deal when a company hands you its private data to another company and trusts you with it, and it's another chink in the armor, potentially. Yeah. I watched Marques Brownlee, his review of the WWDC. I don't know if you're familiar with him. His channel is MKBHD, a really good tech YouTuber, a really popular, one of the biggest ones out there. And a couple things struck me about this. One, he didn't mention Gemini at all. Through this whole review, which I found strange. I don't know if that's something maybe Apple has some sort of fiat where he can't talk about it. I don't know. It's possible. And maybe it's not noteworthy enough. Maybe the normal person doesn't care that it's Gemini underneath. The second thing I took from this is that, man, you guys are just now getting, you're just now getting. Android. So if my Ring app has multiple times that it's gone off over the course of the day since I looked at it, it will stack those together in the same bar, so I can do a drop down and see them all. You guys didn't have that. You just had notification until this update. And then you also had I've had now for 4 or 5 years, I've been able to take an image and tell the phone that I wanted to do a search on that thing, and it could bring up web results, store results, where I could find out what it was, buy it, whatever. You guys are getting that just now too. So, 4 or 5 years after I've had it on Android. Anyway.
Is this Jason's way, a roundabout way of saying this is Apple's admission that Android is better?
Might be. It might be. I don't know. I don't know that Android's better. I know that there's better options, both hardware-wise and user-friendliness and customizability than Apple. And I also know we're heading more towards homogenization as well.
Yeah. And it turns out it looks like users prefer Gemini. That's interesting.
Yeah. Who knew? I don't know. There's some good things in there. I think as Apple users, you'll be happy that you finally have some of these features that I've had for a while. The integration with Siri seems good. It seems like you're going to be able to have Siri look at your emails, whether that be Gmail. I'm sure it'll be able to look at Gmail. It seems like anything with a hook or with a permission to allow Siri to interact with can. So for instance, I can have Gemini interact with Spotify and it can run Spotify for me. I just have to tell it, play a song in Spotify. So it sounds like Siri's going to be able to do that same stuff with apps that allow it to. So it'll be able to look at your Gmail or your iMail, whatever you guys call it, and look at, schedule appointments for you on that calendar or this calendar, or do all of that kind of stuff, look up your contact information, that kind of thing. So I think that'll be really handy and useful. And then there's stuff like the whole, what's it called? It's the glass stuff, the liquid glass. Like there's now a slider to make it more glass or less glass. Like who cares? I mean, maybe it looks good. I don't know. I don't know if you even have that stuff or care. Another thing that I took from Marquez's Brownlee's video that I thought was really interesting is that the one generation ago was, I think the 16 was the iPhone 16 was the generation. And that was the phone that was brought out and built from the ground up for Apple Intelligence, And now the new Siri won't run on anything below the iPhone 17. So if you have the phone built for Apple Intelligence, you can't run this new Siri AI on it. It won't have it. So just one generation later.
It just gives you a reason to go buy the next one.
Go buy the next one, yeah.
Apple users have the money, by the way.
Oh, of course, yeah. No,
That's the stereotype.
I used to work for a Porsche dealership, and when cars were first getting CarPlay and Android Auto, it was typically one or the other. It was very rarely both. Now, pretty much all of them have both. But Porsche in specific, I remember they didn't want anything to do with Android Auto because it didn't have their customer base, right? It's a real thing. I mean, it's a real thing where certain people have iPhone, and it's because they have, I don't know, a preconceived notion of what it represents, of the status symbol it brings. I just think they don't know anything about computer hardware. I don't know.
I've always had both. Well, particularly since I've been working, my corporate phones have mostly been Apple, but my private Android.
Yeah. That's good.
So I kind of see the merits of both, but the question is, what price are you willing to pay as well?
Maybe. What do you mean by that?
Maybe.
They're both the same price. They have flagships and competing models all the way down.
Yeah, but my point is, like my daughters, their $200 version can perform on par with the other ones, right? Of Apple, right?
I see what you're saying. Yeah. Probably true. Yeah. Anyways, okay. Good episode, interesting stuff. Lots of interesting through lines that we're going to be looking at in weeks to come. We hope you come and join us for those through lines. Very interesting stuff, like where is this compute cost going to take us? Where is all this CapEx spend going to take us? We've got a lot of interesting IPOs coming up. We've got Anthropic soon. We've got right after that OpenAI, I believe, in September. That IPO is going to happen and come to fruition. So make sure you stick with us because we're going to be looking at all that stuff as it happens. Right here on Show Your Priors Podcast. We have a new episode every Tuesday. Mike, you got anything to close on?
No, good episode.
Like, subscribe, leave us a comment, tell us you were here. We'll see you next week.
Mama, I think I made it. I'm kind of like Tulsa famous. I'm hanging out with Gary. Now they know what my name is. Feeling like Sir Mike, it's money in my name, bitch. Humble to perform on